This is Linda Osborne with Eastern Realtors and 72soldaustin.com. Last week, a friend of mine sent me a text saying that she has a friend who had been in the middle of a mortgage application, but the loan officer had stopped returning her calls. I recommended she contact some of my mortgage partners, which she did. It was a strange text, though, because this rarely happens. Most loan officers are professionals and will stay in constant contact with their clients. So later that week, I received some mortgage industry updates from my mortgage partners, which provided a better understanding of what is going on and how mortgage companies, investors, and servicers have been affected by recent events. At the end of this video, I posted several links to videos and articles which provide more detail. I will also post these to my Facebook account right before this post comes out. I am definitely not an expert in this area, so I am not going to try to explain it. However, as I did last week with those looking to defer their rent payments during difficult times, I wanted to provide some caution to those who are looking for forbearance help with their mortgage payments. Per Investopedia, a mortgage forbearance agreement is an agreement made between a mortgage lender and a delinquent borrower in which the lender agrees not to exercise its legal right to foreclosure on a mortgage, and the borrower agrees to a mortgage plan that will, over a certain time period, bring the borrower current on his or her payments. Due to the disruption the current COVID-19 pandemic is having on the U.S. economy, there have been multiple actions taken. Recent government bills and mortgage industry actions, including the recently passed CARES Act, affect mortgages differently depending on the type of mortgage it is and how each company is choosing to meet the requirements. If you find that you are going to have trouble making your payments, you must communicate with your mortgage servicer to find out how they can help. The servicer is the company to whom you make your mortgage payments. Be very, very careful about this. As with landlords and rent payments, there is typically no free ride. It is important that you understand when and how you will be required to pay your servicer back. If the payments are deferred, they may be due all at once as soon as the forbearance period is over. It is also important to understand that even if your credit is not affected by these government and industry actions, it may be very, very difficult to get a loan in the future if you ultimately cannot pay the money back. My recommendations on making your mortgage payments are as follows. 1. Pay your mortgage if you can. If you don't pay now, you will have to pay it back later. And it is generally much easier to pay now than to have to catch up on 2, 3, 4, or more payments later. If you absolutely can't make your mortgage payment, contact your mortgage servicer. Find out if you can get a forbearance, and if you do, what the payback terms are. Make sure you are comfortable with the payback terms. If you are not, try to negotiate something you are comfortable with. Not paying the servicer back could lead to serious ramifications, including, but not limited to, foreclosure and or an ability to get a loan later on. And number 3, if you are thinking about refinancing or purchasing a new home and there is any chance at all you may lose your job, stop. Wait until this blows over and revisit the process then. Also remember that a mortgage company will rerun your credit right before your closing. So if something happens between your application and your closing, they will find out and your closing may be in jeopardy anyway. I hope this helps. If you have any concerns or questions, feel free to give me a call or comment below. I will answer the questions I can or direct you to someone better qualified to answer them if I can't. Hang in there, we'll get through this together.